In the next few months, something is going to happen that has never happened in the history of human civilization. One person, a single human being, is going to be worth $1 trillion. And the event that makes it happen, the SpaceX IPO, is expected as early as June 2026, which means we might only be weeks away from watching history happen in real time. So today, we're going to break down exactly how Elon Musk becomes the world's first trillionaire, what SpaceX is actually worth, and, most importantly, what this means for everyday investors right now. But before we get to the trillion-dollar number, we need to talk about something most people get completely wrong about billionaire wealth. When you see a headline that says Elon Musk is worth $400 billion, most people picture a bank account, a digital number with a lot of zeros, maybe a vault somewhere. That's not how it works. Not even close. The term net worth basically means total assets minus total liabilities. Not everything is in cash. Here's a better way to think about it. Imagine you buy a house for $300,000. A few years later, the neighborhood booms, and your house is now worth $1 million. On paper, you're a millionaire, but you don't have $1 million in your pocket. You have a house. To actually have that money, you'd have to sell. Billionaire wealth works the same way, except instead of houses, it's equity stakes in companies. Musk doesn't have hundreds of billions sitting in a bank. What he has is ownership, large ownership stakes in some of the most valuable companies on the planet. When those companies go up in value, his net worth goes up. When they go down, like when Tesla dropped 60% in 2022, his net worth drops too. So when we talk about Musk becoming a trillionaire, we're really talking about one question. How valuable does his empire need to become? And how does the SpaceX IPO get him there? Let's start with the empire. Most people know Musk from Tesla and Twitter, or X, as it's now called. But the company that is about to change everything is SpaceX. SpaceX was founded in 2002 with a wild idea: make rockets reusable and slash the cost of getting to space. For years, it was a punchline. Then it became the backbone of NASA's missions. Then it launched Starlink, a satellite internet network that now has over 9 million customers and 9,000 satellites in orbit. That alone generates roughly $15 billion in annual revenue. Think about what Starlink actually is for a moment. It's not a rocket business. It's a subscription service, like Netflix, but for internet access from space. Every month, 9 million households and businesses around the world pay a flat fee for satellite broadband. No cables, no cell towers, just a small dish, a clear view of the sky, and internet fast enough to stream, work, and trade from almost anywhere on Earth. Ships at sea use it, airlines are adopting it, remote communities in Canada, Alaska, and rural Australia that never had reliable internet now do because of Starlink. And SpaceX is expanding into direct-to-cell service, which means eventually your phone connects to a Starlink satellite without any special equipment at all. That's the business that makes Wall Street value SpaceX like a tech company rather than an aerospace company. High margins, recurring revenue, and a global customer base with almost no meaningful competition. SpaceX isn't just a rocket company anymore. It's a global internet infrastructure company with a rocket division. And in February 2026, Musk made it even bigger. SpaceX completed the acquisition of xAI, his artificial intelligence company, in an all-stock deal. The combined private valuation came out at around $1.25 trillion. xAI brings Grok, Musk's AI assistant, and the vision of putting AI data centers in space, running compute infrastructure from orbit, powered by solar energy, outside any single government's jurisdiction. Let's be clear about what xAI actually is, because it matters more than most people realize. xAI built Grok, an AI assistant that competes directly with ChatGPT and Google's Gemini. It's embedded in X, the platform formerly known as Twitter, which gives it access to real-time information that most other AI models don't have. But the reason Musk merged xAI into SpaceX isn't just about the chatbot, it's about where AI is going next. Right now, the biggest constraint on artificial intelligence isn't the software, it's the physical infrastructure. Data centers need land, power grids, and cooling systems. They're expensive to build and politically vulnerable. Musk's vision is to solve all three of those problems at once by putting the data centers in orbit. Satellites powered by solar energy, running AI compute outside the jurisdiction of any single government. It sounds like science fiction, but it's the thesis that justified valuing xAI at $250 billion. And it's the reason the combined SpaceX entity now looks less like an aerospace company and more like the infrastructure layer for the next generation of the internet. So what you now have is one private company that does rockets, satellite internet, artificial intelligence, and is laying the groundwork to put a supercomputer in space, and none of it is publicly traded yet, which brings us to the IPO. In December 2025, Ars Technica published a report that SpaceX was planning to go public soon. Musk replied on X with, "As usual, Eric is accurate." That short sentence sent markets into a frenzy. Since then, multiple outlets, including the Financial Times, have reported that SpaceX is targeting a listing as early as mid-June 2026. And just recently, reports emerged that SpaceX has begun preparing a confidential IPO filing with the SEC, now targeting a valuation of over $1.75 trillion. That number has moved up from $1.5 trillion in just the past few months. The company's CFO has been meeting with institutional investors since December, and investment banks are already jockeying to underwrite the deal. If it happens at that price, the SpaceX IPO would raise up to $50 billion and would surpass Saudi Aramco's 2019 listing as the largest IPO in history. Now, here's a pro tip. For anyone who hasn't watched a major IPO happen in real time before, here's how the process actually works. First, SpaceX files what's called an S1, a registration statement with the SEC. This is the document that reveals the company's finances, risks, and business details to the public for the first time. Because SpaceX is large enough, it can do this confidentially at first, meaning the filing goes to the SEC but isn't public yet. Then comes the roadshow, a period where SpaceX executives travel and pitch the company to big institutional investors like pension funds and mutual funds, who get to buy shares before the stock is available to anyone else. Once that demand is measured, an IPO price gets set. That's the price per share at which the stock officially launches. Then on the first day of trading, the stock opens on an exchange, likely the NYSE or NASDAQ, and retail investors, everyday people like you and me, can buy shares for the first time. That first day is almost always volatile. Prices can spike dramatically or fall sharply within hours, which is exactly why being set up in advance with a funded brokerage account and a clear plan matters so much. There's also one more detail worth knowing. Musk has publicly stated he wants to give Tesla shareholders priority access to SpaceX IPO shares, and Starlink customers may also get early access through a directed share program. If you're already a Tesla holder or a Starlink subscriber, pay very close attention when that S1 drops. Now, one point worth making. Some analysts think $1.75 trillion is aggressive. At that valuation, SpaceX would be trading at roughly 60 to 70 times its annual revenue. For context, Apple, one of the most valuable public companies in the world, trades at around 8 times revenue. The bull case for SpaceX says this premium is justified by Starlink's growth, the space infrastructure play, and XAI. The bear case says it's a FOMO-driven valuation that will correct after listing. Both views are legitimate, and we'll link to some of that analysis in the description so you can form your own opinion. But let's do the math that actually matters here. When does Musk hit $1 trillion? Musk owns roughly 42% of SpaceX. At a $1.75 trillion valuation, his stake alone is worth around $735 billion. Add in his Tesla shares, currently worth around $100 to $120 billion depending on the day, plus smaller stakes in X and Boring Company, and you're looking at a total net worth somewhere between $750 billion and $850 billion at current levels. For Musk to cross $1 trillion, SpaceX needs to be worth roughly $1.57 trillion, which is actually below the current IPO target of $1.75 trillion. In other words, if the IPO prices anywhere near its target, Musk crosses $1 trillion with room to spare. Polymarket, one of the more reliable prediction markets out there, currently puts the odds of Musk becoming a trillionaire before 2027 at 72%. That's not a certainty. Markets could fall, the IPO could be delayed or repriced. Musk's involvement in politics has already cost Tesla sales and share price, but 72% is not a long shot either. It's more likely than not. And if it happens, it won't just be a record. It will be a genuinely new category of human wealth, something that has never existed before in history. Now, you might be wondering, is there any way for a regular investor to be part of this? The honest answer is not directly, not yet. SpaceX is still a private company, and pre-IPO shares are reserved for institutional investors, pension funds, venture firms, sovereign wealth funds. There's no way to buy SpaceX stock on any retail brokerage today. But here's what you can do right now. A handful of ETFs, exchange-traded funds, give you exposure to the space economy as a whole, including companies in SpaceX's supply chain and orbit. The ARK Space Exploration ETF is one example. But honestly, the more important move right now isn't which ETF to buy. It's making sure your account is set up and funded before the IPO lands. When SpaceX lists in mid-2026, it will move fast. You don't want to be scrambling to open a brokerage account while the stock is already trading. You may also want to look into investing it in a tax advantage account, such as a Roth or traditional IRA if you are American, and a TFSA or RRSP account for Canadians. Links to get set up with a brokerage are in the description below. One more time, this is not financial advice. SpaceX IPO stocks will be volatile in the early days of trading. Do your own research before putting any money in. But being prepared isn't speculation, it's just being ready. If you found this entertaining or informative, subscribe. We're going to be covering a lot more topics. Drop your questions in the comments.